I say the date. All right, audio test. We're going to take a bite of banana and get this show on the road. Don't forget your potassium, folks. It's a real deal. Don't want to get cramped up while you're trading this crazy market. Good afternoon. Welcome to Chicago Future of Finance. I'm Oliver Rennick. Thanks for tuning in. 2 p.m. here in Chicago means we got 1 hour left in the trading session. Equities holding on. This could be a lot worse. 6,800 in the S&P 500 is holding on for dear life perhaps, but still holding on. So that means risk radar yellow across the board, green on stocks. If you're above 6,800, I generally err on the side of bullishness. When you're below that, the potential for that kind of volatility explosion, that negative convexity, that gamma pressure is there. But we have been able to continue to find generally supportive price action. We are fading though from the highs of the day, so that's obviously not an ideal look just in terms of the short-term price action. Here's the chart of the VIX, which has obviously been trending higher, had this really big red candle, has come back down. I think it makes sense for us to go back to that trend line, which is VIX 20. So usually a pretty good bet when options get as expensive as they were at VIX 35 is to then start selling volatility and collecting premium. Harvesting premium is kind of the option traders go-to, and I don't really think this is any different. In fact, generally speaking, in the grand scheme of things, geopolitical events and drama on the political stage is generally the most reliable dip buying opportunity markets give you. Now, obviously, tensions are extremely high given what's going on in Iran and the fact that it is lingering here, not quite as in and out as fast as we were in Venezuela, but still, generally geopolitical things air out in the U.S. favor and the market's favor overall. Look at the big candle on crude oil, 120 bucks. That was a monster number. I did not see that coming. I didn't think we would have the potential to explode that high. I was wrong on that. You can go ahead and give me grief if you want. But that being said, for the overall long-term chart of crude oil, unless we hold up, above this 90 bucks, you're kind of still in arguably a downtrend. But let's see what happens here. The WTI situation could potentially affect inflation for sure, but it's going to have to be a lot longer lived. It's funny, I'm hearing the word transitory a lot from folks in the Republican pro-Trump camp, a word that they've hated in the past and have rallied against Powell on. Now they're saying that this will be transitory. There's some kind of irony in that perhaps, but that's just the nature of the game. You adopt words when they suit your narrative and you rebel against them if they don't. But here's the bond market. Do you see anything here interesting from the bond market? It's pretty tough. It's kind of a hard argument to make. The bonds are freaking out in any way. So the bond market's pretty chill. If you frame it in terms of the 10-year, you will see something. This is my sideways triangle on the 10-year yield, a pattern that suggests there is a big move coming. We've threatened both the upside to the yield last month, then the downside of that yield at 4%. So the bond market really is also just going sideways. That brings me back to the risk radar, which is a lot of yellow, with just the general kind of bias being positive for stocks. So the chart for the 10-year definitely has some potential for action. So that's where CPI comes in tomorrow as a very important number that we do want to watch. We're going to take a look at some of the bets around that. We got Pete Najarian joining, taking a look at the economic data. We got Nigam Arora from the Arora Report, and we've also got Charles Moon from Prosper Trading, looking for stocks to pick. And we're kicking things off on the volatility front with the one and only Noel Smith, Convex Asset Management, joining me on the line. Noel, market, I think, with VIX back to low to mid 20s, and the S&P holding 68. I mean, certainly this could be worse for what's going on around the world. What do you think?
I think that the market is down 1% on the year. I don't know that wars in general have a large sustained price shock in terms of, do we go down 20% in the S&P because of this? There's really not a lot of analog for that. So as much as I would love to, give you some interesting soundbite that says, the market's falling apart or there's all kinds of crazy things to do here, you need to get out and, put on your helmet. I just don't see it that way. Stuff is relatively calm for oil going to $120. That is the CL, that is.
Yeah. Oil at 120, many geopoliticians, either their nightmare or their dream scenario, depending which side of the saber rattling they're on. But action in Iran essentially has been like the number one trigger point of analysis for years, maybe comparable to like Taiwan. The saber rattlers, all we've heard for years is Iran's going to be the flashpoint, or Taiwan, basically. So if we can get through a massive flashpoint that did have the direct impact on crude, and we're at VIX 24, I'm with you. I'm not freaking out.
Yeah, I totally agree. And I also think about it from the perspective of, I think most people would agree, no matter what side of the aisle you're on, that Trump wants the market to go up. He wants to be able to point to a line that says price go up. I don't think he wants, $12 a gallon gas prices. And I think that he's going to do everything he can before the midterms so that the market isn't crashing. So with that, he has several things at his disposal he can do to make energy flow, whether that be from, Russia to India, China, through the Straits of Hormuz, even if they do mine the Straits of Hormuz. Now, the thing that I was talking to somebody else about this, and they're like, well, yeah, it's a 20-mile wide corridor between the Straits of Hormuz that, you can get some ships through there. Well, a lot of people don't understand that the shipping lane is actually much smaller. It's around 2 miles with another 2-mile buffer. So, the idea that they could mine that and or attack with something small arms like rocket propelled grenades, things like that, that stuff kind of is in play. And so it does require some kind of escort or military supervision. So with that said, I think that their ability to have short-term disruptions is there, but I don't think that this is a buy a zillion, 10% out of the money puts in S&P. I don't want to jinx myself, but I just don't see that, at least right now. I think Trump will do everything he can because it's politically expedient to make the market go up.
Okay. I don't disagree with any of that, by the way. I think that's all very logical. Let's look at it from the math perspective here, Noel, and the volatility perspective for options traders navigating this right now. What did you think about my point at the top, which is that, generally the higher VIX goes, the kind of more you want to sell vol. I mean, that's like the rudimentary, ape approach, but isn't it also correct?
Yes, but no. Every now and then, markets don't usually crash from everything is fine and then just whack, right? It doesn't happen like that. Vol tends to creep up. The market is really good at sniffing things out, and then markets do crash from oversold levels. So I guess I disagree in the sense that every time VIX goes up, you should smash it. And not only that, but if you say you should sell vol, how? What do? Do you buy puts? Do you buy puts so you're insulated? Do you buy put spreads? Those things are expensive. Then you have a large vega component to those things. Are you supposed to go out there and just do these ETPs? Those things are really risky too. Just because SVXY goes down 10% doesn't mean it can't go down another 10 or 30%. So that's a tricky trade to do. And if you want to go out and buy VXX or VIX puts, bear in mind, you're going to be buying 150 vol. You don't think those things could go to 80 vol? Of course they can. So you could be dead right with the direction, but you could be dead wrong with the collapse in volatility as that goes back down. So if you do want to try to pick your spots and be short volatility, you would best do it with spreads, calendars, ratios, flies, things like that.
Yeah, definitely well said. And that was definitely an important point too in the video I just put up today, because the idea that you can go, we talked about this last week with Brent quite a bit, that you just reiterated, which is really important, is that there is that build-up, and you can absolutely have that convex move, that asymmetric move, when you've already had a trend for volatility. I've got the VIX futures up that have been in that uptrend, and obviously the VIX has been in that uptrend. But that being said, you can also do it as a spread so that you're hedged from that potential for asymmetry, where you won't get blown out. You'll lose what you put in. Risk defined, but that's kind of where I err on this, just because and by the way, I think also given the range, you'd probably be just as reasonable to maybe sell an upside spread too if it's above, say, 6,900. It has been very difficult for us to maintain elevation above, say, 6950 in the S&P. So maybe you just go both ways and go back to playing the range.
Well, selling options has been working this year. The problem with selling upside is you give up upside. Everybody knows that. I took the opportunity to add a little risk when some of this mine news came out. I don't mean miners like digging gold. I mean mines like explosive mines under the water. When this mine news came out 45 minutes ago or so, I did add some risks. So, in sense of talking my book, I am adding some beta at these levels. But when you're trading volatility, my advice now and forever will be you should make it risk defined, because if you don't think VIX can go further than you think it can and will. And the minute everybody gets on one side of the boat, it'll absolutely destroy you. I mean, look at XIV in 2018 or SVXY in 2018. Those things got, eliminated. Well, SVXY got mostly eliminated. And so, the idea that you should be in these products, or you should try to time these products without some kind of notion what your max loss should be, I would strongly advise against that, because I've seen too many guys, get all their money sent to money heaven not doing that.
Yeah, no, that's a good point. I also like, to your point, which is anytime the news gets like more bearish in terms of the geopolitics, the more I generally want to fade it. But obviously things, we don't know exactly what's going on over there, who's got mines, who's got what tech, but it just seems like we're generally doing things pretty quick in and out. So, and the other thing too is that when I look across assets, if we move out of equity just for a second, I like the point though that you're telling us a little bit about what you're doing. I love that. Bonds, had a decent rally coming into this month, and then they sold it back down, ultimately have gone nowhere. The dollar, which was on a nice run, got stopped out at 99.5. It's just I don't see a lot of broader macro things outside of WTI that are showing, sustainable elevated volatility or major regime change. Maybe I'm missing something. I know Pete up next is watching gold and silver, but even those two are still below recent levels.
Well, even if you're missing something, or Pete's missing something, or Noel is missing something, the market doesn't miss anything, right? The market sees all, because it's the aggregation of everybody's opinion at any one given time. So, that's one thing that's beautiful about the marketplace, or especially the options marketplace, because it is the nexus of the knowledge of all of us, and specifically the people that are willing to put their money where their mouth is. So if you look at the bond market, it doesn't really seem to care. You look at the gold market, it's pretty chill. And if you look at the dollar or other large macro things, ex oil, that's kind of why, the VIX is coming back in. The idea that we're going to have an oil shock and therefore a proportional move in the CPI. And also bear in mind that the CPI is one inflation gauge, but PCE is the other inflation gauge that doesn't get as much headlines amongst us, but it's the main thing that Powell has talked about. And I understand Powell is going to be out in May as well. But PCE and CPI, PCE is lower than CPI, which is kind of rare. So if you say that inflation is up, but PCE isn't up, that really does harm the narrative of oil go up, interest rates stop where they are, and we no longer get any more rate reductions. So even that narrative is a little shaky from that data. So again, taking opinions aside about mines in the Straits of Hormuz or any of that kind of stuff, the marketplace and the data that we're focusing on really doesn't say there is a broad narrative here that everything's going to fall apart.
Yeah, well said, well argued there. So all right, let's come back to the volatility dynamics then. A few other things that I want to hit is correlations, which have risen and are generally staying fairly well bid, if you will. I do think that's an interesting point, that the market, obviously after having dispersion to a great degree and being the main story for months, we always kind of knew, though, that dispersion was likely to break more in the form of downside price action versus upside. But I do wonder, Noel, how you're thinking about that, because I know you really liked that trade. I'm looking at Core 1M, the 50 Delta 1 month implied correlation, and that is 1 year highs basically and sitting there. So I wonder if there's a trade there in some ways. Can we stay highly correlated on the way back up? Because that would be nice.
The way back up in SPY terms? Yeah, of course.
Sure,
whenever the school of fish move or the flock of birds move in unison, that's a correlation move, right? So if we are going to war or there's going to be, an inflation because oil is going to go to $200 or something like that, that is a correlation on event. So the idea that the Core 1M is hovering around $26, could it go to $46? Of course it can. It absolutely can. But is the trade better now than last time we talked? Absolutely, which is exactly what I was saying. If you want to sell VIX at 12, which is historically kind of low, and it goes to 10, but it's realizing 6, fine, it's still working. And correlation's been kind of the same thing. It is historically low on a relative and an absolute basis, and which is why we've had it on, but we've had it on so small so as to not really be that meaningful because the absolute value of that correlation has been so low. And now that it's ripped up from, where was the Core 1M? I don't look at the 1M because I care more about the 3M. It's gone from 7 to 27. Of course it's better. It's a much better trade. So the entry point in doing something like that is far superior now than what it was, a month ago.
Like that. Nice. Good perspective. Good work. Noel Smith, great to catch up. Thanks, man. Appreciate you being here.
Thanks.
Appreciate it. Good perspective on the volatility landscape here on a day where stocks are certainly faded off the highs, but they are trying to hang in. Let's get Mr. Pete Najarian in the mix. He's standing by, and definitely want to talk about that Burrow Lives trade and gold and silver, which we teased a little bit there, but haven't quite hit all the way, given that those have been such important trades. But maybe that's going to be a way through this. Perhaps we've also got some economic data on the way and some bets on Kalshi coming up. That means it's time for the gamble. And I gotta say, I'm kind of missing football season, Pete. This animation is making me miss it.
The one good thing, Oliver, is football never stops, man. After the Super Bowl, it goes to free agency and it goes to the combine, and then it goes to the next thing, which is the draft, and then all of a sudden it's the summer camps to see what the draft really looks like. I mean,
That's very true.
Some big movers out there, man. It's the one sport that goes 24/7, 365. It really does.
You're totally right. I hit the pool today, went for a little swim, and was waiting for my breakfast sandwich at the gym. And they had, I don't even know what they had on. It was like Scouts or something. And from the journalist perspective, that's, I think, the funniest part of the sports season, though, is that it just turns into pure speculation.
Right.
The coverage is, pure speculation. I mean, but hey, we got stuff to speculate on that's, I don't know, geopolitics is a sport for some people, Pete.
Absolutely. Oh, the geopolitics part of it. I mean, obviously, just today alone, just not too long ago, they just talked about, well, did we really escort somebody out of the Straits or not? And it turns out probably not, according to what the White House is saying. So, if there's any reason to be volatile, it seems to be the case right now. There's a lot of volatility within the markets themselves.
Noel mentioned something maybe we start with, which is the kind of political motivations to try and get this thing done, over, make it look a lot more like Venezuela and the way we got in and out than, WW, you know what. I'm looking at Kalshi's 2026 midterms, Congress balance of power. Dems taking House and Senate has absolutely risen this month. It's still below 50%, but it is the highest one at 45%. Split House and Senate for Republicans and Senate 40%. I do feel like there's something in here, Pete, for traders not just wanting to take this particular bet, but thinking about what it means for markets, and that it seems motivation might be building for the Trump admin to try and get through this quickly.
Yeah, certainly. And it's something that the president is watching everything, it seems, right? I mean, does the guy ever sleep? He's got his eye on
everything.
I've heard he doesn't too. I think 3:00 in the morning, the phone call is ready to roll. So it is who he is, and he's on top of just about everything, it seems like. So, I wonder, here's a question for you. the president's a gambling kind of a guy. I wonder if he decides to put anything down on any of these kind of plays that he could be putting down. I mean,
that's what
it's
everybody's kind of worried about. That's been the counterpoint to a lot of these markets, is that it's just going to be a bunch of insiders and stuff. But I mean, you can also see a lot of the action if you wanted to. You can see who's placing the best. They've got a lot of transparency. I mean, look, it's like politicians weren't doing things to enrich themselves to begin with. At least now, if I want to, I can try and ride the tail. I mean, what do you think about this, Pete? Do you think that the odds of Democrats taking power is a motivator to try and get this thing over with quickly? Oil prices back down?
I would think so. And I think under all circumstances, you're trying to get those oil prices back down, right? I mean, it's something that hurts from the standpoint of people talk about inflation and they talk about where are some of the areas that are getting inflated. And certainly we're going to have a pretty good spike probably at the pump. Unless this does happen very, very rapidly. So there's so much going on right now, I think, globally. I mean, we already were dealing with all kinds of different things here and in the state of Minnesota and other places, and then looking at what that might look like into the future, but also obviously what's going on in Iran. I mean, that is front and center, and that is the most important thing in front of us right now. And the spikes that we got for crude oil, with the fact that we got all the way up to nearly, what was it, 120? I mean, everybody's got their number, 119, 120, 121, whatever. We've pulled back off of that, but we're starting to get a little bit of a lift today off of those lows, too. We got down to about 80, and I think the last I looked, it was trading closer to 84, 85, something like that, the price of oil. So, all these things matter, and it's a matter of how do we handle it and how quickly can we handle this.
Yeah, the oil move for the Venezuela and Maduro thing versus this is like night and day, totally different. But at the same time, it does kind of add this list of, oil-related events that might be able to show up somewhere in inflation. I'm curious your thoughts on that, Pete. We do have a CPI number tomorrow. Crude at $86. That red candle from yesterday certainly withdrew significantly, and I think that's encouraging. But if you look at bets on inflation, which I'm going to pull up here, obviously they've risen the last month. The thing is, I don't really see any sign of it in bonds anywhere.
No, we're not seeing it there, and it's been so quickly, so rapid what we're seeing here. That big spike, obviously, yesterday in the price of crude, and then all of a sudden it comes back down again to the 80s like we were talking about. One of the things, quite honestly, that really kind of struck me was the movement that we had in some of the airlines. It wasn't surprising that they were going down, of course not, because that is their biggest cost is fuel. But the idea that maybe things are going to go a little bit quicker, maybe as the president has kind of gotten up in front of everybody and said, very complete was the actual quote. So with that, it's pretty interesting because we started seeing all kinds of buying going on in the airlines. Now, they haven't been right as of today, but it's just been yesterday and today. And there was a lot of call buying yesterday across the board, whether it's JetBlue or it's United or it's Delta. All of them were seeing multiple different strokes where they were coming in buying upside calls. So something that I'm keeping a very close eye on, that for sure. The other thing that stands out the biggest for me, though, right now, Oliver, to be honest with you, and it was something that came to me right as we were coming on the air, was the strength that we are seeing in a specific category where it's AI / memory / storage, all of that. Those names have been crushing it. And when it comes to the fact of the rally back up and everything else, where is some of the leadership? Well, you got names like Seagate, you've got names like Western Digital, you've got SanDisk, you've got Micron, all these various names. And then start looking at just even some of the other chip-related names, whether it's an Intel or a NVIDIA or AMD or take your pick. It's pretty Wild West right now. Those guys are having a pretty nice run. So something I think everybody needs to keep an eye on is where are the markets going and what's moving now, because we might see this repeat again where we've seen some of the up and downs of the volatility.
Yeah, great point. Thanks for taking me there. Well, that's a little bit more kind of brass tacks when it comes to trading is, all right, we can speculate on the geopolitical stuff. If you want to try and go out on a limb and either make those geopolitical bets on Kalshi or try and read through what they mean for the market. At the end of the day, I do generally favor just erring on the side of bullish and then trying to find where there's price action that looks like it's ready to rock. I mean, you mentioned some of these semiconductor names. SMH is up 1.2% today. Yeah. And the cloud stuff, which is down slightly today, was actually up the last 2 weeks. This is the first down day for CLOU. And for IGV in like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, like 12 days.
Right. Yeah. And that's another one, just so you guys know and the viewers know, IGV, we're seeing call buying coming in there that's very large and very interesting. So, you know what? It doesn't mean they're always right. Are they hedging? Are they buying and they're selling stock? I don't think so. But I think the buying that we are seeing is legitimate buying, looking for more upside to be able to see how things actually move in that direction as well. You know, one other spot that I know that everybody's been very critical of, well, the financials are getting beat up and this and that or whatever. Take a look at Citigroup at some point in time too. We've seen paper in there time and time again. It's been one of these that's actually performed better than I think a lot of people really recognize. And I like this name a lot. And one of the reasons I do is if you go by what most people do, which is the price to book to look at a valuation level of these financials, Citi's still the very, very one of the cheapest out there. And you know, we all love JP Morgan. We all love Goldman Sachs. We all love, you know, the variety of these names, Morgan Stanley, you can go down the list. And a lot of the time Citi gets kind of kicked off to the side, but I think that the reality is Citi is one of those that has more room probably to the upside than some of the others. So, you know, there's just across so many different sectors that we're looking at today where we're seeing incredible amounts of option activity. And for me, that's a great thing. And especially when those volatilities come down a little bit, unless I want to do a buy right or something like that, where I can take advantage of that. But you can also, you know, you guys were talking about spreads just before I came on, you and Noel, and I'll tell you, I think this is a great environment to put on spreads. It really is, because when that volatility is there, why not, right? And reduce a little bit of your own risk.
Love that. Really like that. That's why they're there, right? It's for moments like this when you do want to express directional conviction, but you want to be able to cap your losses. You don't want to get blown out. You know, they work best when you feel there are potential moments for high convexity. And as Noel was just pointing us out, Brent did last week, the steady climb in volatility is the type of thing that can lead to a blowout move in vol. So, you know, and then let's say the vol comes in, and then what? Your worst scenario is you were right, but you regret, you know, you made money, but not as much as you could have. Like I'm happy with that, right? That's like getting third place in a poker tournament. I would have liked to win it, but I still made good money.
I'm with you, man. That's the way you've got. That is the mindset that people have to understand. You don't always have to be the biggest winner to still be a winner. And that's basically what you were saying. So, you know, I totally agree with you that it's not always easy in the market. We know that. It can get very complex. It can get a lot of different things going on. But I think based upon what we are seeing in the markets, it's been reacting just like you would probably expect, right? I mean, with some of the volatility. And by the way, a 35 VIX is something that doesn't stay up there for very long. Yes, it can be up for a little while.
You got to have daily shock.
Yeah. I heard so many guys talking about it yesterday, and I'm thinking to myself, wow, you really think it's going to be up there? You think the S&P is going to move 2% pretty much every single day? For how long do you expect that to be? I mean, you know, those are the questions that need to be asked that I don't think the people that are oftentimes talking about that are really fully on tune on what exactly the VIX is measuring.
I mean, I would be downright shocked because right now the VIX is kind of just correlated to crude and to some extent very recently. And I would just be shocked if crude got back to that high intraday yesterday of 120. But then, look, I was wrong on crude too. I didn't think it was going to quite explode this much. But I think long term, I will be proven generally correct that, you know, the U.S. production plays such a big role to keep that price capped. But you can definitely see where volatility and crude have been aligned. Yep. So a lot of the things that you're looking at, it seems like stock basis, Pete, I look at that vol and I go, all right, let me take advantage of this by, you know, understanding that the whole market might have volatility elevated because of one specific corner of the market, which is crude. And that sounds to me like opportunity.
Yeah, absolutely. And you know what? There's one other little metric out there that you can take a look at more often than, especially now, but that OVX, the oil volatility index itself. I mean, that thing, it wasn't that long ago we were trading in the 20s, the 30s, the 40s, whatever it might be. And then all of a sudden we've gotten up over 100. So obviously that measure is going to be a very interesting one. And I've had it on my sheets every single day, but I think more people are going to start seeing that and kind of paying a little bit more attention to that as well, because clearly that oil volatility index up there at over 100 is something pretty interesting that's probably not all that sustainable either.
Pete, I want to make sure I get your thoughts on gold and silver real quick. Gold up 2% today, silver up 5%, given how great and consistent of leaders those were in terms of risk appetite the last 3 months. What do you think that tells us here today?
You know, I like the fact that when you see gold and you see the consistency of buyers of gold, it's not going to go up every single day. It's not going to be a straight line. There's going to be pullbacks. There's going to be that time where it pulls back a little bit and then has an opportunity to move once again. But it was just a week ago where we had 110,000 of the March 495 calls being bought. 110,000 options at a shot. So, and they were spreading that off. And SLV, sort of a similar sort of a deal, but SLV, as we've talked about many times, it has a lot more uses than being, something wonderful for a ring or whatever else you want to talk about. It is in everything from, the phones to EVs to the computers to whatever you want to point to. You've got silver. So that one's another one where, sure, there's going to be pullbacks after violent moves to the upside, but they continue to come and want to buy more to the upside. So until I see that slow down or end or whatever, I'm going to be very bullish on both because, the pullbacks, I think, just create one more opportunity.
Love that. It's worked so far. I mean, the persistent options flows there in gold and silver, it's been pretty amazing keeping them bid. Even Bitcoin holding in today, Yep. I don't think too much to analyze there, still in the range, but there's some signs of risk appetite here. Great stuff, Pete. Thanks very much.
You're the man. Thank you, man.
Excellent
See you,
work.
Oliver.
You got it. Pete Najarian, nice range there. Love that very much. Nigam Arora joining me from the Arora Report next. Always an interesting take. We're going to look at some technicals on the S&P, see what stuff he's buying. Got a 3-minute buffer break from Innovator. Now, see you in a minute.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovator's floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection. Seeking to deliver more than 70% of the upside, and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
All right, welcome back. We got stocks kind of flailing a little bit in the throes, maybe, of some weakness as we got 25 minutes left. NASDAQ is struggling here. We're not quite at the lows of the morning, but we're too close for comfort. Undoubtedly a fade here. There's the chart as NASDAQ futures trading back below 25,000. S&P 500 futures trading below 6,800. Look at the battle that happened there at 6,800 from 1 p.m. Chicago time up until about 20 minutes ago. So I do think that technical line in the sand has certainly been a real one. Let's talk some technicals. Let's talk some stocks. Joining me, Nigam Arora is the founder of the Arora Report. Nigam, welcome back.
Are you, Oliver?
Watching this market struggle, man. It seemed like we had such a good start today, but we are fading. I want to start with the technical look. I'm going to bring up your chart from your report, of course, the Arora Report. And it looks like you've got a similar kind of range that we've been monitoring here. You've got it in the SPYs here, so just take it as a multiple for those following along. What do you think, Nigam? Is this support here, or are we falling apart, losing support?
Well, I tell you, it's hard to say. So what's happening is, if you watch it very closely, and those are really short term, who are trading by the minutes, right? Which I do not recommend, but you can do this. There was a tweet by Energy Secretary that U.S. had escorted a tanker through Strait of Hormuz. Oil went down, market was doing good. In the morning, there were rumors that U.S. was doing that, and the market starts going higher. Then, of course, it turns out, now that tweet is deleted, the rumor was false. Oil rises again, and market starts coming down. So it's oil leading the market by the nose. So that's what's happening. On the chart, it shows the support zone, and that's kind of a little bit lower. We have not seen that, at least in the recent past. And the concept there is fairly straightforward. So the way we determine support zones is we look at, try to estimate where the stops might be, and we think there are a lot of stops under 6,500 and S&P 500. And typically what happens is when you start approaching those stops, I'm not the only one who figures that out. A lot of people figure that out, right? So you short the hell out of it, drive those stops, take them out. There's a flush, and then you bounce, right? So the strategy here would be, if that happens, we get into the support zone, assuming, there's no big geopolitical news that's very negative, I think you buy. So we use fairly complicated algorithms. They're a mixture of quantitative and technical and fundamental macro, all that. But kind of a little bit of a victory parade, which is hard to do. The markets are tough. In the chart that you were showing, we raised cash and for our long-term portfolios and raised our hedges one day before the war started, right? War started on Saturday. We did it on Friday, but that was great. And then yesterday morning, when there was so much selling, our morning capsule title in part read, Trump positioned to declare victory, right? We're looking ahead. And so we started buying yesterday, and our hedges were very profitable, so we took some of them off. And of course, you know what happened in the afternoon, right? Trump came along and said war will be short and went up. So that's, I think you look at it day by day. Take your shots when the opportunities are really there. Other than that, it's better not to get chewed by volatility. Otherwise, I see a lot of people, they're trying to catch every little tiny move up and down, and the volatility is so high, you get chewed up. Unless you're not doing a risk control, right? I mean, if you're doing a risk control and you got the stops, you're going to lose money. You're going to be chewed up. So you got to be very careful at the spots you pick.
Well, it seems like based on the signals you were given, it was a pretty short-term trade in terms of raising the cash for what, 48, 72 hours maybe. So does it make sense in these moments to take advantage of those big pops in volatility? Let's say there's another headline.
Well, not now. So we raise cash. So about now 10, 11 days. The day before the war started. And yesterday we anticipated that Trump is going to come out, and we didn't know he was going to come out yesterday afternoon or this week. So we did buy things yesterday, but then it ran up again. We're still holding. We have not sold them yet. But if the market fails here, the things we bought yesterday, we may want to get out of those. But chances are we're going to hold on to them right now.
Okay, so you're still erring on the side of generally positive.
Yes,
market
definitely.
is holding on to 68.
Right.
We're kind of, the whole thing we're trying to figure out basically is the odds of that kind of convex move to the downside. Obviously, we're starting to put in a little bit of a lower highs, lower lows trend on the S&P 500, which does make me a little worried. But we can't seem to stay below 6,800 for any longer than we can stay above it. So it's like there's a real pin there, Nigam. And I wonder if we go hypothetical here, because I know you scan a lot of stocks, you've got favorite themes and sectors. What if I tell you that we're going to bounce, volatility is going to come down? What's on your list for stocks, for themes, for sectors that you would like? Is there anything that you're just waiting for the coast to clear so that you can have it for a rip?
Sure. So at the Arora Report, we run 5 services. 4 of them are long, 1 of them is short. Okay, and our short service has been there for almost 2 decades. I think there aren't many who have survived and done well over 2 decades, right? So I'm always looking for what I'm going to go long, what I'm going to go short, right? So on the short side first, it's fairly straightforward, right? Volatility is so high, it's not going to stay that high, so you short it, right? Favorite thing to do, easiest thing to do is VXX is an ETF, just short it, okay? That's one. The second thing is some of the oil stocks, liquefied natural gas, the VG, Victor George, that's on my list to short sell. Okay.
That's on your short
so
list.
I would do those things. Oil is very, very hard itself.
Those are on your short list, you said, Nigam, right?
Those are short lists. Now let me get on a long list. So the long list, if you're doing something right now, let's look ahead. Next week is NVIDIA's GTC. There's a GPU tech conference, okay? It always runs up stock. So you kind of look ahead and say, what are they going to talk about? And I think they're going to talk a lot about optical networking, using optics as opposed to copper for networking, even within the chips now. So then you say, what are the stocks that will benefit? And I think the best thing you can do is buy a stock called Marvell Semiconductor, MRVL. Great earnings recently, ran up. Any dip, I would buy it this week. So that would be the one. The other one,
I didn't realize they ripped so hard after earnings, by the way.
Absolutely.
In the middle of all this chaos, stock-specific moves on earnings.
The other stock that I don't own, I would love to buy it. And the symbol is AAOI, Apple, Oscar, Ida. Take a look at the chart.
Okay, yeah, it's ripping.
Okay, so that's again optical networking. They make transceivers, transmitters, and receivers. The earnings call was just incredible. They're basically saying they're going to go 10 times the revenues in a couple of years. I don't know if I buy that. I've never seen a company execute that well that they can go up 10 times. But right now the market is buying it. And the funny part is if you watch the chart, right, Oliver, I know you watch these kind of things very carefully. If you pull up like a minute chart or a tick chart, you will see every tiny dip gets bought, okay? Even when the market goes down, if you look at yesterday's low in the morning, right? Look at as much as this stock has run up. Yesterday morning, right, when Nasdaq was down 2.5%, this stock wasn't down a whole lot at all.
Yeah.
So that's the kind of stock that can
sold on
just
Sunday, ripped Monday. Yeah.
right. It can go ballistic. So if there are dips, I look at that. The other one again, I also don't own is Corning. It is kind of a lower beta version of the AAOI, but it's still moving a lot. Look at GLW as a symbol. Again, optical networking. Another one that we used to own got out, a lot lower. Unfortunately, is Ciena, CIEN, optical networking again.
Yeah.
I mean, those are the stocks I'll be looking
that's
at.
A chart that's a chart that gets me going. I like that. Dip into earnings, bounce on earnings, up when the market's down, very close to a recent all-time high where you can see that getting through and finding a new catalyst, to the upside.
Right. So those are the kind of stocks this week. If the market takes a downturn somewhere, these stocks get hit, I would be buying those because I know that the catalyst is coming up next week, right?
Yeah.
So the other thing is going to be, which is going to be very interesting trading opportunity, is Micron. Depending on what NVIDIA says, are we going to be able to find more efficient ways? And take a look at the chart of Micron. I think all of you know that by heart. I mean, what the stock has done.
Yep.
MU.
It's been an absolute ballistic.
Gone ballistic, right?
Wild ride. Also
right.
big today. There's a lot of stuff that's moving underneath the surface.
Oh, yeah, that's up to date. That's up to date. So here is a kind of a play. Now, so as you know, we take on some very long-term positions, hold on, and then we take on short-term positions on top of it, right? So Micron, we are long from $21.77. Think about it, right? Huge gains. Now, where are the short-term trades? So here's a kind of a combination for short-term that we kind of look for.
Okay.
There's a Korea ETF, EWI. Okay, so three big memory manufacturers: Micron, United States, SK Hynix, Korea, Samsung, Korea. Right. So if you look at the chart of EWI, we bought it not that long ago, at last year around $48, and you see now around 130 or something is here. So at 154 last week, we took partial profits. We put a stop around 146 and take more partial profits, still holding most of the quantity. But one other thing you will see is if Micron starts moving up with a slight delay, EWI starts moving up. And there's a big range in both of these things, right?
What's the name of that one, Nigam?
This is EWI, the Korea ETF.
I got EWI. I got
No, EWI.
I got the BlackRock ETF for that one.
No. Edward William Yellow.
Oh, why? Got you. There it is. EWI.
Right? Do you see that?
Yeah.
So
yeah.
right at 154, right? I can't read your screen, so I don't know if you got the right one. But
yeah, we're at 130 right now. 154 was the
yeah,
high.
yeah, you got the right one. So right at the top, 154, we took partial profits. We're holding long from 48. But here's the kind of trade that if Micron starts moving up, you will find with a tiny bit of delay, EWI starts moving up. Okay. If Micron starts going down, a little bit of delay, EWI starts going down. So if somebody is really active, you can play it all day long.
I like that. Micron up today, EWI struggling a little bit, so maybe there's a little short-term arb. I love the eyes on the tech trades and good eyes also for next week on GTC. Could be an interesting event to get us back on track with the tech bullish themes. Nigam, thanks. Appreciate it very much.
Well, nice to be on your show.
Report. You the man, nice. I like the looks there at some of the short-term trades and potential, and our AI story maybe coming back full force. Nigam Arora at the Arora Report. So hardware, architecture on the list. This is the Gemini AI response on what to look for. I love using AI to prepare for AI. Speaking of tech, speaking of stocks, we got 11 minutes left. Now that we're kind of warmed up thinking about some trades, let's go to Mr. Charles Moon joining us from Prosper Trading Academy. I like that Nigam brought that up and put it on my radar because I kind of forgot about GTC in the midst of WW3, Charles. Could we get back on track next week and refocus with some big tech discussion?
Yeah, I mean, I guess it all depends on, right now we're in a news-driven market. You talk about the volatility in commodities, and, this could have a really resounding effect across the board. When we see margins get raised and volatility kick in higher, this is where firms are exposing themselves to the highest risk parameters, especially within these, institutional thresholds. And, if some of these trading desks or pods have specific conviction, what happens is that these margins start weighing on their positions. They have to liquidate to add more capital. They can't just print up capital. And that, of course, could have a, resounding effect in the stock markets. And truth be told, these guys can make, the year, the decade on some of these trades, especially relative to crude, especially with the way that we've seen the record movement in crude over the last 24 to 36 hours here. So, it's going to be a pretty interesting story going forward. We've seen the crazy volatility in precious metals kick in. Now we saw the blow off the top rally led to a blow off the bottom drop in crude. And, I just don't know what to think about what's going to happen next week, let alone tomorrow.
That's where I kind of wonder if NVIDIA and GTC allows us to maybe put some of this to the side. I mean, I get your point that the geopolitics are really driving the short-term bus. But I do wonder, to the point of there's some stuff in today's session that's hanging on, for the ride pretty well in the tech category. And I do wonder if that's going to be maybe a little bit of a tell for how this market finds its footing. We were looking at Sienna earlier, up 6%. Micron's having a good day. There's some stuff here. Marvell up the last 2 days after a big earnings report. There's some stuff trying to peek through here.
Sure.
The bullets and the bombs.
Well, with the optics sector, we've actually seen some weakness, but there's a little bit of life because LITE, which is probably the most prominent name in the optics sector, was added to the S&P 500. But if you look at that whole basket, AAOI is the strongest performer, making new all-time highs today. But names like Sienna, COHR, GLW, those charts are almost exactly the same as LITE.
You're right. No,
So,
you're totally right.
if we're going to look at a standout name, it's the AAOI. And I actually thought that they might have been potentially, you hear a lot about rumors about stocks being added to the S&P 500 before it. It was eerily quiet. I knew that the rebalance was coming last Friday, but I had absolutely no clue what stocks were being added. And I kind of guessed that maybe AAOI had done enough to draw the attraction of being added, but, it turned out to be one of their counterparts, LITE. For me right now, if you want to hinge on anything in relation to market direction, Oliver, watch the U.S. dollar. Something that we picked on since last week, almost on a tick-for-tick basis. If the dollar weakens, the market strengthens. The U.S. dollar spiked from 98.5 up to this 98.90 level, and that coincided literally with the Qs dropping from 612 down to 608. And so, in one of my rooms, I actually have a 3-minute chart up with the Qs and the U.S. dollar, so people can get a really good
right now
on how to trade. Yeah, I mean, it's a perfect leading
fairly
indicator.
inverse. You got to be really tuned into the dollar to notice those moves, but also if you're trading the dollar, it whips around quite a bit, obviously. So small moves can get you a big bang for your buck. That was my favorite trade for a couple of years there, basically. And I was curious about this chart too, Charlie. It hasn't given me the direction I want, intermediate term, but short term, to your point, I think it is pretty helpful because the dollar had been such a loser for much of the last segment of this bull run that it waking up all of a sudden kind of naturally does coincide with some shakiness of this bull run.
Yeah, and again, there's a lot of different other factors that were kind of coming into play that were kind of affecting, how the U.S. dollar performed. Yeah, we obviously the biggest one was the yen carry trade and the yen pairing, but there's also been pairings relative to the pound. I'm not a real big currency guy, but there's been this dysfunction, almost imbalance in the markets, and a lot of it was partly attributed to like how precious metals were performing. And now that we're seeing precious metals acting abnormally historically wise, we're going to see crude acting abnormally historically wise. It tells you that there's a lot of different things going on behind the scenes, not really pointing out to manipulation per se, but maybe advantageous opportunities that certain funds have been able to uncover and take real advantage of. And this kind of leads to the madness that we heard with Jane Street. Come to find out, they're also the largest SLV shareholder of that particular ETF, and you wonder what kind of influence they actually had on precious metals via the futures market. Very similar to the direct correlative behavior and the strong influence they had on the crypto market. And for those that don't know, it basically this drop in crypto from the skies down to the 60s was pretty much blamed purely on Jane Street. They were the ones that were able to basically depeg and cause the cascade of lunar. And again, these were just discrepancies that these extremely smart individuals, these quants, were able to discover and take advantage of. And when you're a fund that controls $600 billion assets under management, there's a lot of influence that you could apply if you really need be in certain circumstances. So, it just leads to where this market it's been a bit irrational. It's been almost 5 months that we've been churning at these highs. The market refuses to fall no matter what's been going on in the news. We continue to rally back, and just like when we're about to break out, we just get that rug pulled and we're just kind of rinse, wash, repeating. If you look back even just to last Monday, we were down big Monday, we were down big Tuesday. We made really strong intraday runs. We followed that up with a big up day on Wednesday. Same thing, down Thursday, but intraday run. Friday, a little risk off going into the weekend. We did the exact same thing yesterday, and today we followed it up to the upside here. Yeah, and again,
we always end up at 6,800 basically, and BTC kind of always ends up at like 70-ish. Tell me go back to crypto here for a second, Charlie. If now Jane Street's been outed, does the market have an opportunity to normalize? I know you were looking also at Circle, right? Which is a blockchain crypto related. Was it CRCL? That's been really ripping since earnings. So does that tell us anything positive about potentially crypto?
It certainly does. Obviously the guideline is kind of looking at MSTR, Coinbase, and Hood,
which is doing nothing.
And these are stock. And and again, they went from skies falling to really outperforming some of these tech names as of late. Circle in general just churning up higher here. They're in a lot of open space without much technical resistance. So they're pretty much on a free run to run 40, 150 once they broke out from 93. I think a good indication that this, sector is going to get healthy is if we actually see Hood start breaking out above 84 and pushing it to 90.
Connection to crypto.
Yeah, 100%. And, MSTR is another one. If we see them get above 150, this could be an outlier and outperformer. Coinbase the other day actually and today were actually above the 50 SMA, but have pulled back, and that, they're now 70, maybe $60 off of their lows, and really trying to make this really higher high, higher low movement. And it really looks like they're starting to reverse trend. And again, a lot of that does have, some sympathy with, Bitcoin now trading above 70, but it just seems like, whatever suppressive nature that was involved, Wall Street's finally let up, and now the ceiling's starting to get a little bit higher for these names. And the reason why I'm watching them is because they've actually started outperforming a lot of different names, notwithstanding the software names, which have been getting absolutely obliterated. And they now in the last 2 weeks are starting to come back to life.
Firmed up. Yeah, they firmed up.
That one actually coincides with the U.S. government trying to shut out Anthropic. Once that news happened, all of a sudden these software stocks started turning to the upside.
The idea of software having firmed up, Circle doing pretty well, seems like the outlook for Bitcoin has improved. I thought the same. I took the red light off Bitcoin and crypto on my risk radar a week ago, so we'll see if it turns to green. But a lot of range bound in the overall market as we do finish up just almost perfectly unch on the day for the NASDAQ and the S&P, absolutely marginally lower here, but the index slightly below that 68. Charlie, thanks for taking us into the bell. Good eyes on the crypto names and the tech charts. Appreciate it very much, sir.
Take care, man.
Moon, Prosper Trading Academy. Scan the code to get started with Charlie and his crew, especially if you like the zero DTE stuff. Thanks, Charles. Thank you for joining Chicago Future of Finance. That's it. Have a great night. I'll see you tomorrow, 2 p.m. Central Time.